Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, now let's take a look at the gold market. Gold market currently also carries a lot of opportunities for trading, and in fact we already have met some of them in the previous week. On the Thursday and Friday, market has formed multiple stop grabber patterns, as on the daily time frame, as on the 4-hour time frame, and in fact these possibilities that the gold market could give us mostly based on the potential news that Fed Reserve could announce in the nearest meeting that will take place on Tuesday and Wednesday. Some movement could happen on the gold market as on the other markets. If you would like to read the fundamental part of our research, you could visit our forum and read the corresponding thread. You see the link to this thread on your screens. Also, take a look at the analysis of the Japanese yen, since it also contains the cross research with some fundamental moments that have the relation to the gold market as well. Also in the research you will find the analysis of the higher time frames on the monthly and the weekly time frame. But most interesting for us will be the daily analysis, and now we will try to create the trading plan that, as I hope, will let us to possess ourselves on the market with the minimum risk. Although this trading plan will be a bit sophisticated, so if you will not catch something in the first viewing of this video, you will try to review it or read the corresponding analysis in the text version. That will be maybe a bit simpler. So in fact, on the daily time frame it's not much new, since you could see the whole week market stands in the small consolidation that now looks like the bearish flag pattern. And here we have, from the one point of view, from the Napoli framework, we have the bullish context. Since trend holds bullish, we see 3 in a row stop grabbers that has been formed by market in this area. The target of these stop grabbers are the same. They assume the taking out of these highs. That will be the minimum target of these patterns. The invalidation point of these patterns is this low, since if market will erase these patterns and will move to the downside, then the bullish context will be vanished and failed, since market will shift trend to the bearish and simultaneously will erase all these patterns that now are point on the potential move to the previous highs around 1425 area. At the first glance, this move looks rather significant, but do not forget that we stand on the eve of the FOMC meeting, and if some announcement will be made concerning the quantitative easing program, then probably some splash and volatility on the market could come, and market in fact could show some fast move right to this area. So currently on the daily time frame, it's all about the flag. As market will show the breakout of the flag to the upside, market will continue move higher. If market will shows the breakout to the downside, then this will be absolutely with the theoretical foundation of this flag, since flag is the continuation pattern. It has appeared right after the plunge, and it could treat it as the continuation pattern from this ABCD move to the 1320 area. That is how we initially treat this overall action. But the pairing of the stop grabbers and the FOMC meeting has added some changes in our plan, and we just can't take the short position right now, since we have bullish patterns and we have bullish trend. So if you have the bearish view on the market and you are searching to enter short here, then your trading plan is to wait either ending of this potential splash to the upside, potential appreciation if it will happen, or wait the breakout and erasing of this bullish context. Market will break to the downside, wait for some small retracement on the intraday charts, and try to take the short position. That's your trading plan. The further discussion that we will dedicate to entering long will have the relation to those of you who would like to take the long position, and for those of you who think that market would really show the move to the upside. On the 4-hour time frame is very significant information for us because it contains the setups that let us to possess ourselves with the as minimum risk as possible currently. And I'm now speaking about another stop grabbers that has been formed here on the 4-hour time frame, but these patterns have slightly shallower target. They have the minimum target right here, 1395 highs. That's the minimum target. It doesn't mean that they will stop here and turn to the downside. That's just the minimum target. Market could proceed high. And I suspect that this could be some kind of the ABCD action to the 1401. That is possible because now development looks very harmonic and gradual. That retracement was not too extended to vanish this potential ABCD. Now it looks rather attractive, and this really could happen. So how these patterns could help us to possess with the minimum risk? First of all, that stop grabbers. The target is very close to the current action, and market probably could even reach it before FOMC meeting. Since these patterns carry high probability of reaching this target, that makes our long entry based on these patterns very hopeful, and that probably market will reach this area. Besides, we could be focused only on this swing of this stop grabber. It's not very significant in terms of the risk. Now, when and if market will take out of these highs and reach the target of these minor stop grabbers, that will allow us to place the stop to the break even. And for instance, take the half of the position if you would like to have some profit, guaranteed profit from this trade. If you do not want to risk all the profit on the FOMC meeting. So when the market will hit this target, you could protect your position by the break-even stop loss, and you will be possessed for the FOMC meeting by the riskless trade. In this case, you could hold totally your position or partially and try to ride on these stop grabbers right to this area when these highs will be taken out. That's the major idea of the current trading plan. How it could be done? On the hourly time frame, here is our Friday picture, how we have entered long on this first stop grabber on the 4-hour time frame. On this one, we said that we could catch the retracement down on the stop grabber swing and try to enter long since the target of this pattern is right here. So recall our trading plan. We said that this could be ABCD retracement, and the 618 support of this thrust up, of the stop grabber's thrust, will be acceptable to watch for. That could be the nice area to enter long because it carries small risk. This is an invalidation point. The risk was small, and that led us to enter as close to the invalidation level as possible because gold market likes to show the 618 retracements. That could be also in agreement with this ABCD action. So that has happened. You can see that market has passed slightly lower, beg your pardon. But in general, this plan has worked, and we were possessed on this potential upward action. Why we can't do this again? Market give us probably the last chance to possess to the upside with this new stop grabber that has been formed on Friday, and we could apply the same tactic. Why this retracement down is possible? Because take a look, market has accomplished this ABCD pattern: A, B, C bottom, 100% extension. Some retracement could follow. We know that gold market again likes the 618 retracement. Also take a look, here stands the weekly pivot point that probably market will tend to test before taking any direction. Also, that is the confluence support, 1383, 1385 area. I find this area as nice area to watch for potential entry to the upside in the beginning of the week if retracement will happen. Your risk will be this low because that is invalidation point of that stop grabber. Once you will take the long position, your minimum target will be here, tops at the 1395, and if and when market will reach it, you could protect your position by the stop even break-even stop loss. You could move your stop to the break-even and just watch the move what will happen on the FOMC meeting. You could partially take the profit on the half your position if you would like to take some profit, because we do not know what will happen on the FOMC. If no announce of the concerning quantitative easing will follow, then market could start move to the downside. In this case, you will not lose anything, but you also could lose your profit. That's why maybe it makes some sense to take the half of the profit, the minimum target. So that is a bit details that you could probably resolve by yourself. The major idea is I just talked and just how we have discussed. Um, Maybe it sounds a bit sophisticated, but this is really the setup that led us to take a position and trying to ride on these time grabbers on the daily time frame right to the 1425 area. That's a significant move on the gold market with really very small risk. By taking very small risk, there are such kind of chances we can't meet very often. And let's be focused on the 1385, 1383 area. Let's see how this situation will turn. Hopefully we will get the possibility for trade this opportunity, because it's really very interesting. Also, guys, you could take a look at the today's Japanese yen analysis, since on the current week I have decided to shift to the Japanese yen. Well, it doesn't mean that we will abandon the euro currency, but the weekly research is dedicated to the Japanese yen, so it also contains a lot of interesting moments. Also, you'll see the link to this research currently on your screen, so if you would like to meet it, you could visit our forum and read it.